Morning guys, Joel Frank here, market analyst for YouTrading, and in this morning's video I'm just going to be giving a quick overview on what is happening in markets right now and some of the key things that you need to be looking out for in the week ahead. So let's quickly start by taking a look at the S&P 500, and as you can see it continues to perform pretty well. I've got it here, these are daily candlesticks, and look at this. Markets haven't actually opened yet, so this is the futures, but it looks like we're on course for a third consecutive day of gains. So remember, sort of the middle of last week, you can see here, we had some pretty nasty sell-off going on. At the time, investors and market commentators were talking about concerns over the spread of the Delta variant. I'm going to go through some more asset classes in a second, and we're going to talk about how the risk-off seen last week, it wasn't just seen in US equities, it was seen in a lot of other asset classes as well. But towards the end of the week, risk appetite does seem to have recovered, and that is continuing at the start of this week. With regards specifically to the S&P 500, you can see, I've got it highlighted here, there's a trend line which has been going on for a while now. You can trace it all the way back to March. This nice upwards trend line. It's now 4 touches on this trend line, so very much a trend line that people are going to be looking at. And also the green line, that's the 50 DMA. That area, people have aggressively bought the dip. So it looks like potentially for the S&P 500, the next stop, we've said it so many times over the last couple of months, but the next stop is probably another test of those all-time highs. Before we look at some of the other asset classes, let's just talk about what's happening this week, because most of the week, unfortunately, traders, most of the week is probably going to be quite boring. Okay, I've got a calendar here. This is just the Forex Factory calendar. We've already had these Eurozone flash PMI data out this morning for Euro and relevant for sterling. Didn't really move markets, as you can see. Got some red numbers here. Broadly, the tone of the PMIs this morning out of Europe were that they weren't that great, and they will contribute probably a little bit to this narrative that's been going on, that global growth is expected to slow now, partially as a result of the Delta variant spreading around the world. That was part of the reason for the risk off last week. But today, we're going to have these PMIs, these flash PMIs out of the US. So that should be interesting, to be fair. And we could see a bit of market choppiness on that. But then, look, Tuesday, there's nothing. Wednesday, there's just another, some more survey data. This is just out of Germany this time. And we've already had the most important European survey data, so that won't be that interesting. Core durable goods orders, okay, I mean, that's always interesting, but it's unlikely to move markets. Crude oil inventories, that's of course relevant for crude oil, but not for other asset classes. Then things are going to get a bit more interesting from Thursday. Okay, this is what markets are waiting for, the Jackson Hole event, where it's basically the Fed puts on this event every year at the end of August, where they get together and global central bankers from all over the world get together, and they talk about monetary policy, basically. This time it's happening online because of the spread of the coronavirus. This will be the second year in a row that's happened online. The reason all this is important is because in the past, the Fed has used this platform, because it does get a lot of attention, this get-together. They've used this platform to announce policy changes. So there are some expectations that Powell, who you can see here, he speaks at 3 p.m. London time on Friday. There are some hopes that he's going to hint at the Fed's potential quantitative easing tapering timeline. Okay. And markets aren't really sure what to expect, to be honest. Are we going to get a taper announcement in September? And then is the tapering going to start in October, or is the taper announcement going to happen in October and then start in January? You know, there's a lot of uncertainties here about the timing to do with the tapering. So we're hoping for some more on that from Powell. There is a bit of a risk that because of the Delta variant, and you know, literally the Fed at the last minute had to move this to an online event because they were supposed to be meeting in person. But at the end of last week, they scrapped the in-person meeting and now it's just online. Is that indicative of the fact that the Fed are getting more concerned about the Delta variant, and does that push back their tapering timeline? These are all the questions that we've got to ask, but we're going to have to wait until the end of the week, obviously, before we get these key questions answered. Also, I've highlighted here core PCE price index data. That's the Fed's favored measure of US consumer price inflation. That's out on Friday. So Friday, yeah, basically Friday is going to be the big day. You've also got US GDP numbers, but we've already had the first estimate, so they're probably not going to be that important. So yeah, pretty much it's all about Friday. So let's have a look at some other asset classes. Let's have a look at the dollar, for example. As risk appetite has improved in the last 2 days, you can see the dollar has fallen back from those highs that were hit. When did they? That was actually on. That was on Friday. The Dixie, the dollar index, hit above 93.70, now slipped back under 93.50, and you can see it's testing here this key. It was a key area of resistance in July and earlier on in August, but now it's acting as support. So this is probably going to be your range until Friday. And then, based on what happens, if Powell does give a hint that the taper announcement's coming soon, well, you could potentially see the dollar break out again. Or imagine he's cautious and imagine he's talking about the risks to do with the Delta variant, doesn't really say anything about tapering. Well, that could be interpreted as dovish, and then that could send the dollar lower again. How about gold? Whilst we're talking about the Fed and the dollar, I might as well talk about gold. You can see gold is currently, it had this volatility the other week, fell all the way below 1700, but it's now back in the upper 1700s, and it's testing the bottom of this range that we were in for a couple of weeks back at the for most of July and then the start of August. Not able to convincingly break above it yet. We might edge above it this week, but same with the dollar. The big move for gold is going to come in wake of what Powell has to say on Friday, and kind of the opposite to the dollar. If he's hawkish, well then we're going back here, aren't we? But if he is more dovish, talking about Delta variant risks, well then we're probably going to break convincingly back within this range and probably go above the 200 DMA here in blue, and we'll definitely get above the 50 DMA here in green and 21 DMA, which we're already above in orange. Crude oil, last asset we're going to talk about today. Crude oil cares less about Fed monetary policy. I mean, it will move in tandem with stocks and with the dollar, but crude oil is more concerned right now about the global coronavirus story. Now, things have been mixed. There was some good news out of China. No new infections reported on Monday. That's the world's second most important economy. So that is good. That bodes well that there's not going to be a severe, widespread China lockdown. However, elsewhere, Japan, Australia, New Zealand, in US, Europe, cases are still rising. So it would seem to me that there is a likelihood that this recent negative trend that we've seen for the last sort of 2 months could extend. For now, we've got decent support from this low that we had back in, let me just quickly, when was that low? Back in May. That is offering some decent support. That's around the 61 level. If that goes though, the next level you want to look at is this March low. All the way down in the 5700, in the 57s. And if the Fed is hawkish and they do send the dollar higher, well, crude and the dollar do have a negative relationship, so that wouldn't be good. But yeah, guys, hope you enjoyed this video regarding the week ahead, and I will see you all in the next one.